Here's a detailed summary of Delta Airlines, DL, 2025 Q4 earnings call, focusing on key financial metrics, forecasts, risks, highlights, lowlights, and executive statements. Introduction. The call began with Delta Airlines announcing strong results to close out their centennial year, highlighting operational reliability and financial leadership. Key executives present included CEO Ed Bastian, President Glen Hauenstein, in his final earnings call before retirement, CFO Dan John Key, and Chief Commercial Officer Joe Esposito. Key financial metrics for 2025. Record revenue, $58.3 billion, up 2.3% year-over-year. Operating margin, 10%. Pre-tax income, $5 billion. Earnings per share, EPS $5.82. Free cash flow, a record $4.6 billion, at the top end of their long-term framework, and the highest in Delta's history. Over the past 3 years, Delta generated $10 billion in free cash flow. Return on invested capital, ROIC 12%, significantly above their cost of capital and leading the industry. Financial performance for fourth quarter 2025. Pre-tax profit, $1.3 billion. Operating margin, 10%. EPS, $1.55. Note: the government shutdown reduced pre-tax profit by $200 million, or 25 cents per share. Note: FAA-mandated flight reductions and weather disruptions impacted non-fuel unit cost growth by approximately 1 point. Non-fuel CSM, cost per available seat mile, increased 4% year-over-year on 1% higher capacity. Full-year non-fuel CSM growth, disciplined execution kept this at 2%, in line with their long-term target of low single-digit growth. Management's forecasts for future quarters/years. March 2026 revenue growth, expected to be 5% to 7% year-over-year. First quarter 2026 EPS, projected to be 50 cents to 90 cents. First quarter 2026 operating margin, expected to be 4.5% to 6%. Full year 2026 EPS, expected to be $6.50 to $7.50, representing 20% year-over-year growth at the midpoint. This is ahead of their long-term target. Full year 2026 free cash flow, expected to be $3 billion to $4 billion. Full year 2026 leverage, expected to reach 2x by year-end. Full year 2026 capacity growth, planned at 3%, with all new seat growth concentrated in premium cabins. Long-term outlook, expecting EPS growth of 20% year-over-year in 2026 and free cash flow of $3 billion to $4 billion. Co-brand remuneration, American Express expected high single-digit growth in 2026, on track to achieve their $10 billion goal. MRO, maintenance, repair, and overhaul business, expected to grow towards and beyond $1 billion in top-line revenue, with margins targeting mid-teens from a current high single-digit. Significant risk factors, government shutdowns, and regulatory actions. The transcript explicitly mentions the negative impact of the government shutdown on Q4 results and potential future policy changes, such as interest rate caps on credit cards, as areas of concern and potential disruption. Volatility of the industry. Management acknowledged the inherent volatility of the airline industry, referencing the challenges faced in 2025 that impacted initial guidance. Unexpected events can derail even optimistic outlooks. Execution of strategic initiatives. While optimistic, the success of ongoing initiatives in customer experience, technology, and fleet modernization relies on effective execution. Economic conditions. While the U.S. economy is described as on firm footing, any significant downturn could impact consumer and corporate travel spend. International expansion challenges. expanding international footprints, while a growth opportunity comes with inherent complexities and geopolitical considerations. Operational recoverability. Despite being named the most on-time airline, Delta acknowledged that further work is needed to enhance resiliency in recovering from irregular operations, particularly with changes in pilot scheduling and contracts. Highlights: record financial performance, achieved record revenue and record free cash flow in 2025. Strengthening balance sheet, reduced leverage by over 50% in 3 years, and ended the year with the strongest balance sheet and highest credit quality in Delta's history. Operational excellence, recognized as the most on-time airline in the U.S. for the 5th consecutive year, with the highest Net Promoter Score among major airlines. Customer experience enhancements, significant investments in expanding premium lounges, rolling out faster free Wi-Fi, and introducing digital tools like Delta Concierge. Successful partnerships, strong performance and continued growth from partnerships with American Express, Uber, and YouTube. SkyMiles members linking accounts with Uber demonstrated the power of loyalty beyond flights. Loyalty program strength. Delta's SkyMiles program and its co-brand partnership with American Express continue to be powerful engines of enterprise value, with double-digit spend growth on co-brand cards. Fleet modernization and expansion, announced an order for 30 Boeing 787-10s to enhance international network capabilities, deliver superior economics, and improve fuel efficiency. Revenue diversification, non-main cabin revenue streams, premium, loyalty, cargo, MRO, travel products now represent 60% of total revenue, with strong growth in premium, cargo, and MRO. Leadership transition. Smoothly planned transition with Joe Esposito taking over as Chief Commercial Officer, ensuring continuity. Employee recognition and profit sharing. Awarded a 4% pay increase and announced a $1.3 billion profit-sharing payout for employees, recognizing their efforts. MRO business growth potential, identified as a unique Delta capability with significant growth potential and attractive margin expansion. Lowlights. Impact of government shutdown. The government shutdown negatively impacted Q4 financial results. Operational recoverability challenges. While operationally strong in terms of on-time performance, Delta acknowledged that recovery from disruptions needs further improvement. Main cabin strength lagging. While overall revenue is accelerating, the main cabin segment has not yet seen a significant uplift, which would be a key driver for achieving the higher end of guidance. Transition to taxpayer status. Delta is transitioning to becoming a partial taxpayer in 2026, which will impact free cash flow generation compared to prior years. Most important statements from the CEO, Ed Bastian. The Delta team delivered a strong close to our centennial year, with results that clearly demonstrate the differentiation and durability we've cultivated. This sets the tone of success and highlights Delta's unique strengths. Operationally, Delta continues to set the standard for reliability and customer experience. We have the #1 Net Promoter Score among major airlines, and Cirium recently recognized our employees for the 5th consecutive year, naming Delta as the U.S. industry's most on-time airline. Emphasizes Delta's commitment to operational excellence and customer satisfaction. Financially, we continue to extend our industry leadership and delivered on key elements of our long-term framework. Reinforces their financial discipline and consistent performance. A key highlight is free cash flow. We delivered $4.6 billion at the top end of our long-term financial framework and the highest in Delta's history. Underscores a critical differentiator and a sign of strong financial health. Our outlook. The year is off to a strong start. Last week, we set a new record for bookings with cash sales up double digits on top of the strength that we saw last year. Provides immediate positive momentum for the current quarter. Structural changes are taking hold across the industry, as unprofitable flying is rationalized, supporting a healthy balance between supply and demand. Points to a favorable industry environment that benefits Delta. Our teams are executing our bold vision of reshaping the end-to-end travel experience and cementing Delta as the world's most loved airline. Articulates the overarching strategy focused on customer-centric innovation. Regarding risks, look at last year. And where we were a year ago, we thought we were gonna have a banner year. And gave guidance kinda similar to what we're giving today. And it got derailed a little bit. So I think the new year offers optimism for a different outlook than we were a year ago. We're all a 1 year smarter and more conditioned to expect maybe the unexpected in some of the policy approach. This acknowledges past challenges and the need for cautious optimism. Most important statements from the CFO, Dan John Key. Strong cash generation is a key highlight of our performance. We reinvested $4.3 billion in the business. Free cash flow of $4.6 billion supported debt reduction of $2.6 billion, and we ended the year with gross leverage of 2.4 times. Connect strong cash flow directly to balance sheet strengthening. We closed the year with adjusted net debt of approximately $14 billion and unencumbered assets of $35 billion, positioning Delta with the strongest balance sheet and the highest credit quality in our history. Quantifies the robust financial position. For the full year, we expect EPS of $6.50 to $7.50, representing 20% year-over-year growth at the midpoint. Free cash flow of $3 billion to $4 billion and leverage of 2x by year-end. Provides clear forward-looking financial targets. On non-fuel cost, we expect another year within our long-term framework of low single-digit growth. Assures investors of continued cost discipline. Debt reduction remains our top capital allocation priority, with the opportunity to grow shareholder returns as we continue to reduce leverage. Outlines the capital allocation strategy and its link to shareholder value. Regarding MRO, quite optimistic about the MRO business. This is a business that we're excited to see across the billion-dollar mark, and one that we continue to hold out and see it as a 2, then getting to 2, then getting to $3 billion of top line, that it can continue to grow. This is a business that should be mid-teens margins. Highlights the significant growth and profitability potential of this segment. Important statements from Glen Hauenstein, President, in his final earnings call. Our strategy is proven, our culture is strong, and our team is truly the best in the business. A strong endorsement of Delta's foundational elements. This consistent and integrated strategy positions Delta with a sustained unit revenue premium nearly 115% relative to the industry. Quantifies the outperformance driven by Delta's strategy. Last year's performance truly showcased Delta's differentiation and industry leadership. Summarizes the success of 2025. For the year, American Express remuneration grew 11% to $8.2 billion, driven by a fourth consecutive year of more than 1 million new card acquisitions and double-digit year-over-year co-brand spend growth in every quarter. Highlights the continued success of the Amex partnership. We are heading into 2026 with robust demand and a balanced industry supply-demand environment. Confident outlook for the upcoming year. I am proud of what we have built together and excited to watch this very experienced leadership team carry our momentum forward. I have never been more confident in Delta's future. Expresses confidence in the future under new leadership. On industry evolution, I think the international continued expansion of international, the new fleets, the continuing. Another thing I think is under Delta is the fact that we've made these generational builds that can really sustain growth for Delta over the next 15 to 20 years without incremental capex into facilities. Reflects on long-term strategic investments. On his legacy, I wanted to help restore Delta back to its rightful place at the top of the U.S. aviation industry. And I think, not just to sound old or arrogant, but I think I could say mission accomplished on that. A humble yet proud reflection on his impact. Overall, Delta Air Lines presented a robust earnings report, showcasing strong financial and operational performance in 2025. The company demonstrated resilience, innovation in customer experience, and strategic foresight, particularly with its fleet modernization and diversification of revenue streams. The outlook for 2026 is optimistic, supported by accelerating demand, a balanced industry environment, and continued execution of its proven strategies.